Hey guys, so this is going to be a market update in the sense of kind of updating you through a few cross asset class points of view that I think are interesting, and also kind of reiterating the no chase policy I have when it comes to chasing stocks. So let's start off with one thing here. So the first thing I'm going to quickly show you is this here, and this is the chart of the S&P 500, and I'm going to quickly stabilize the thing I have here. And we've talked about this now for weeks and weeks and weeks, and it's just, I just want to reiterate the point because it's now finally happening. And so you can see that essentially the S&P had rallied. This is the 31st of December. So from here to the high mark up here a few days ago, this was about a 3.4% move. That move from here to here took 1, 2, 3, 4, 5, 6, whatever. Let's call it 14, 15 days, probably more. It took 3 days to erase all of this price action here. That's it. 3 days. This is what I keep saying about not chasing things, because the reward to risk is so bad when you chase things. So there's a lot of people now that bought stocks over the past couple of weeks or so. They're basically now down. The S&P is only up like half a point or something right now on a move to the downside that took literally 2 days, erased almost everything, but took let's call it maybe 3 weeks to the upside. Here's another example. Watch this. This is the semiconductor stocks. Another point in the market that same exact situation. It took 13 days for it to rally up here. So this is, let me show you. So it took about 13 days. In fact, actually we can go a bit further. Let's call it 13 days. And that rally was about 7%, right? 13 days, 7%. And you guys can see it essentially took, let's call it 2 days to erase all of this. That's why I have a no chase policy. And by the way, now, if you look at this thing, and I'm not buying it here, but now you, for the first time in my opinion, have a better opportunity to buy it than you had any point in the past, at least over the past week and a half, right? That's one thing I want to show you. The other thing I want to show you, and so I still think there's a lot more mean reversion to be had in mega cap stock land. The other thing, and by the way, the Russell 2000 is now negative on the year after being chased a little bit. But I want to show you two more charts, and this is more bigger picture, just so you can kind of see the struggle that a lot of assets have to kind of rally, which is why I think the Fed will remain very dovish. So the first chart is that of commodities. We're going to look at the DJP, which is an ETF that essentially tracks, let's call it a broad basket of commodities. And this is a weekly chart, and you can see the broader trend. And we just now, over the past few weeks, had this reject at a pretty important area, and it's now right back to support. So this is not exactly helping the inflation argument. Also, and this is one I keep making a big deal about, is the yield on U.S. Treasuries. This is the 10-year note, breaking down, I think heading towards 1.4% in the not too distant future. That's not to say that's going to happen today or tomorrow, but in the not too distant future. And the same thing, just in case anyone cares, is also happening over in Germany. So you can look at, for example, I think it's the German 10-year here. Same exact thing happening here. So you can see yield had rallied, and now yields found a lot of resistance, and now they're breaking lower. So this is just something I thought I would point out. Again, chasing over time is a very poor strategy. I know a lot of times that seems like a lucrative thing to do, but again, the reward to risk, and if you've seen this once or twice, you can see, what happens when stocks go steep or vertical. They always mean revert. So I hope this is helpful. If you have any questions or concerns, let us know. Leave a comment down below if you have any questions on this, and we'll talk to you soon.